China wants to make its currency more international, to get it used right around the world, and one of its big policy pushes is to get it accepted by the IMF as a reserve currency. And to do that, they need credibility. So they don't want to be signalling to the world that they're starting a currency war, that they are depreciating the currency to help exporters. They want to show, look, we can take some pain, so we're going to put a floor under it here.
China being such a big economy, such an open economy, and make exchange rates in a much more flexible base and make market base is very important for China and also important for the whole world. So all these steps, August 11 steps, move into market-based exchange rate determining mechanisms and also open the onshore market for the central banks. All those things is sort of on the way to the more flexible exchange rates, more open in the capital market. I think it's very important. When China capital market much more open, exchange rates much more market-based, and obviously should be included in the SDR.
The economy is not so good. China and the slowing growth there is really hurting exports here. South Korea, about a quarter, some estimate maybe 30% of their exports are to China. And that is hurt growth here. It's slower than analysts expected, and they're expecting it to be even slower. So they were hoping that there would be some stimulus, and part of that would have been a drop in the interest rate.
Even if you look at what's happened since in just the month that we've had since they moved the currency, the yuan has weakened a bit, the Australian dollar's weakened twice as much, New Zealand dollar's weakened more, the Malaysian ringgit's weakened an awful lot more. As for the Brazilian real and so on, the Korean won's weakened more and the Taiwan dollar's weakened more. The Chinese can't win a currency war. They let their currency go 5%. Lots of their neighbours will move by between 5 and 10. And I think they know and understand it. And the kind of move we saw in say, dollar-yen, I mean, these sort of 30-40% devaluations, geopolitically, that's unthinkable.